Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, January 28th, 2020. And wanted to wait until we at least had Apple earnings out of the way. Now, I want to say this, and I say this often: there's really three, but at minimum two components to a company's earnings report. That is number one, they'll release earnings, in this case after the bell. This is Apple. They just reported. So that's part one. They come out and instantly the algos process, what's released, earnings and all the other stats on that have been released for the quarterly report. And of course humans as well trying to read and process that and react to it. So you get that, and that's the initial reaction. Then you have the conference call. And I have seen many a stock initially shoot up or down following the release, and then only to see it reverse during the conference call. Now, sometimes initial rips are built upon after the conference call, depending on what they say, and sometimes it goes the other way. So I just wanted to say that you got to hang in there. I always say don't overreact to the initial reaction following earnings. And then of course the third component is even after the conference call, then people have time to digest that, and really you want to see how the stock trades the following day if it reports after the close, because remember, you have all the players stepping onto the field at 9:30 a.m., meaning institutions. If you're a multi-billion-dollar hedge fund or mutual fund manager, pension fund, you can't effectively navigate in the after-hour session. Now, Apple, given, is one of the most liquid stocks in the world. So what I'm saying generally applies to most stocks. And even then, you'll see, the big block trades, most of that happens once the market opens. So what I like to say is give it about a day or so to let the dust settle. We'll see where it goes. And we're going to dive into the charts real quick and try to determine where we go from here. So this is Apple. Yesterday, solid sell signal, broke below the minor uptrend line right here, the uptrend line on the off the December, I think it's December 3rd, yeah, December 3rd lows, well defined, and we had a solid breakdown, but again, it was in front of earnings. Now, with that being said, earnings is out of the way, and the stock is still below there, so that is a sell signal. Call it what you want. Maybe it'll prove to be a false sell signal, a whipsaw signal. Apple is trading up in the pre-market session right now. Here, in fact, we'll take a look at it. This is a 1-minute chart. So you can see the shaded area right here shows you what happened so far. Here's where we closed, right here, where the shaded area starts at 4 p.m. It shot up, and again, wouldn't surprise me to see this go like this or this by tomorrow. But as of now, if I had to venture a guess based on the technicals, the stock is broke down. That's a sell signal, and I would say more downside. And my target is down here. Look at the 60-minute chart. It looks a little better there. You can see I have that same trend line on the daily. Comes in around 279.11 is price support plus the downtrend line. I'm sorry, guys, the uptrend line, the primary uptrend line. So what we have here is a price channel on Apple. If you look at this line here, this was the key uptrend line, same one I showed you on the daily chart off the December 3rd low. Breakdown yesterday, hit that first support, and by the way, I had that color coded in advance as yellow because I said both the yellow levels were the key levels, the channel number one, but then you had a pretty significant price support below, and that successfully held so far. So right now, this looks like a breakdown and a back test, and look at that. You have a little momentum fueled overshoot back into the channel, but with the 60-minute candle. And again, this is showing you the after-hour trades here. They're not shaded for some reason. The chart's not shading, but this is right here's where we close. This is the after-hours action. Perfect back test. Now, I'll say this, it's an objective short. When you have a channel breakdown, that's a sell signal, and if you get a back test of the channel from below, that's an objective short entry with a stop somewhat below, because if you regain the channel, especially on a solid 60-minute close above, even a daily close is all the better, then that breakdown proved to be a whipsaw signal. So it is objective, however, to short here, and you could do it if you're an aggressive trader. I said, went over quite a bit of stocks. I did an earnings update today showing all the stocks in the NASDAQ 100 that report this week. It was 20 something, over 2 dozen, and I went over the charts of each of those, the majority of which are most of them are in uptrends. There's no argument, just like Apple, but it has a bearish technical posture. Some still have sell signals pending, and others don't. So that's it. So again, aggressive traders can short there. the safe bet for most of you out there that aren't aggressive or very active traders. You wait, see what happens tomorrow. See how the market reacts. See if Apple's still below that trend line. And again, whether you want to trade Apple or the broad market, because if Apple goes down, if Apple drops down to my target here, you're talking 13. That's a longer term swing target, by the way, about a 14% drop. So let's take it by step by step here and see what happens. I just extended the divergence line right there. You can see it extends and very much keeps those divergences intact. So that's it. And again, that's only one stock. It's not the entire market, but it is the highest weighted component, top weighted component of the NASDAQ 100 and the S&P 500. So let's keep an eye and see where this one goes tomorrow. Now let's take a look at the charts of my main focus has been to QQQ. If time permitting, I'll get to SPY as well, but let's just start with QQQ here. Okay, and to try to figure out where we're going, sometimes it's best to look at where we've been last couple days especially. So this is yesterday morning, right after the market opened. I screenshotted these. That's not working there. Let me find. Oh yeah, that was the day before. There was a breakdown. This post was from yesterday, and I'm going to zoom in here. You know, on Friday I'd highlighted the impulsive breakdown, saying we had the first sell signal in a long time triggered. We broke the price channel and QQQ came down, hit my first support. I expect a little reaction, then some more downside. Each of the arrow breaks are where reactions are likely. Those are support levels. Again, that was yesterday, as of Friday, that chart. And then yesterday morning I posted we had gapped down. We blew past my 219.84 target. See, we gapped down and came below that, so that once you took that out, that opened the door for the move down to the next support. That's how it works. When each level's broken, if you're not going to get a reaction there, if you take it out, you're going to go down to the next one, and that's exactly what we did. Remember, same exact level that I had highlighted in advance. Even before the breakdown on Friday, that 217 level, or you can see it right here on that chart from Friday after the breakdown, and I had previous charts throughout the, at least for the last week or two, if not more, showing that level as a downside target if and when the channel broke. So there it is. We hit it to the button. I had us bouncing, and I mentioned also going long on the site. This was QQQ 217.70. Had us bouncing up anywhere from this 219.84 to the 221-ish level, and now we exceeded that, but that was a minimum bounce target, and then expected some more downside from there. Okay, and actually, to clarify, I'm going to get to the updated chart. This was again yesterday when I mentioned going long. I reversed, covered the shorts I went into the weekend with, covered them Monday morning at the open there, and that proved to be the low. We tested it again later in the day, or almost tested, and today we ever so slightly exceeded 221. So let's look at what happened since then. This was that was yesterday. This post was from this morning. I mentioned that I was, had a bounce target, preferred bounce target at 221 right there, roughly at 221 level. And when we got there, I mentioned that was my preferred target zone. So what I did is I closed out the longs that I took yesterday, and I'm trading NQ, but I took out the first lot and added a second lot after that, and said that would be it until Apple reports. I don't plan to add anything. If if it goes the other way on me tomorrow, once the market opens, I'll close that trade out. So I'm going in. I went into the day, or the evening, I should say, short. After going home short over the weekend, right there, the breakdown, covering, reversing along there, and trading the bounce up to here. And that's like I said, there's a max bounce target right there for QQQ, and that's still where I think that's probably going to cap it. And then next leg down. Now what this is going to entail is Apple will have to reverse and go the other way for this to play out. Otherwise, this won't. If Apple builds on the gains, we're going to go up on through here, and that's where the shorts that I have, as I mentioned on the site today on rightsideofthechart.com. Later this afternoon, I will not add to those. I will only add to the position on weakness in QQQ, meaning I'm not going to add any higher. I'm not going to scale down on my position or up as in price. I will only scale if we start to reverse and go down. I will add to that position. So I went home with about a half a position, nothing big, because although I'm an aggressive trader, I'm not a pure gambler. And to go home aggressively long or short, the NASDAQ 100 when Apple is reporting is just nothing short of gambling. You might as well flip a coin or go to Vegas. At least they give you free drinks. So I'll keep the position light. If somehow we reverse tomorrow, as I suspect we will, then I'll add to the position. And if we go up here, then I'll just close it out if I don't like what I see tomorrow. Okay, and remember that was from earlier today, so there it was 221, so we went marginally higher. This was through the close right here. If I grab that line at about 221, right about where it is, and I've got to grab it, that's close enough, 221.11, I go up there. We went as high or closed, actually we closed right there at the bottom of the red candle, so 0.16%. Above that level. So far I consider that basically we're right between there, and that was what I listed as my max bounce target, where I expect maximum upside to cap and more downside there. So again, anything we start to get above there, it doesn't completely eliminate the bearish case, but it certainly doesn't help it. And at that point, I don't see any reason to add any shorts. Would I go long it? No, same thing. We still have plenty of divergences. We could certainly go up and then reverse. I just don't chase overbought, especially after a sell signal like this. We can come up. If you look at it this way, I showed you we back tested Apple's channel, but we never back tested QQQ. So that's very much a possibility. And if I pull the plug on that trade, or if I decide to ride it out through there, I may add to it. Possibly depending on what I see on a back test. But as of now, my plan is to wait and see some kind of reversal tomorrow, and before I add to. I'm not too excited about being in a full short position in this market until it shows me a little more evidence, and that really would be something, some solid sell signals on the daily time frame, and not just on any one index or any one stock, but quite a few here. So that's what we're looking at on QQQ, and let's look at NQ, and we'll wrap this up. Okay, so from the same post, this is yesterday morning, Monday morning, after posting, going home, taking a short position home into the weekend. That's where I covered it, that 91.10, 91.11 support level on NQ. We had a sell signal triggered, but looked like we get a kickback rally and then some more downside. So that's why I reversed those positions from short to long. And then I followed up, again, this is that was, I believe, that was Friday. I was showing you that sell signal there. That was Friday's chart. This is the follow-up chart that I posted yesterday morning, saying that's not where I reversed. I'm saying I reversed right here on that 89.67 target. That's where it was. We're likely to get a good bounce. We never got the. Well, yeah, we did have a bounce there. I'm sorry. We did get the bounce on the initial tag of 91.11. There's just been a lot of moving parts in this market lately. When volatility expands, you get the movement. So we hit it, you can see, bounced up to that first resistance area. Then that was a close on Friday. And the big gap right here, remember, futures stop trading on Friday evening and then don't open up again until Sunday evening. So that's when you're going to get a gap in the futures. And other than that, they're pretty much trading around the clock. So this was yesterday morning, and that's where I closed those shorts and reversed for a tradable bounce, because this was a much larger bounce target up to my preferred, my bounce target range, my preferred swing target I mentioned, or short-term target, back to that 91.11-ish level. And again, that was yesterday. Okay, and that was followed up by this chart here. Let me zoom back out. I'm probably making you dizzy, zooming all over the place and panning. This was this morning, about 7:45, so a couple hours before the market opened there. And you can see that I kind of zeroed in these targets, saying that would be the minimum bounce target zone, my preferred bounce target zone. So that's where, again, that's where I reversed back, closed the longs taken here, and started scaling back in. As I said, I took an initial lot there and then added one more lot to bring it to about a half position. And that's my preferred scenario, with a max bounce target up there to 91.74. And as we started to get there, I said NQ was getting close. QQQ just hit the comparable bounce target that I showed you a minute ago. My max, that aligned with that roughly. So that's where I closed out the longs, took the first short lot, and then added the second short lot there. And let's see where we're at now. There it is. That was a perfect tag of that target. 911 bounce target hit. And now let's go to the futures chart, and we'll wrap this up and pick up tomorrow. So there it is. This is live. This is after the close. There's been just a little slight lift above that level due to Apple so far, and we'll see how that goes. But effectively, we're still, right on that level. I have an uppermost target here around 91.74. That's fine. If we go a little underwater on the position, it's not much. It's from where we're at now. You're talking about 0.5%. And anything, again, much above that starts to chip away. It does not eliminate at all the possibility that we're going to take another leg down. These sell signals have been triggered. That I stand by. The sell signals are triggered. Again, did they prove to be whipsaw? We've seen some a few months. Last time we had one was a couple months ago. We had some sell signals triggered. I said on the short-term 60-minute charts, and they played out for a drop, but it was relatively minor, about 3% or so. What's this one been so far? From the highs to the lows is about 4%, and that's I think that's. Yeah, it was a little shy so far. I told you guys this is my preferred target zone from about 88.90 all the way down to 86.94. That's what I'm looking for. That's where I think we're going near term. And if it starts to develop, we'll just go from there. Decide, and then I'll decide if I want to extend those targets. So this is what I'm looking for. Another thrust down, and that would mesh with whatever Apple says on the call. And again, it doesn't matter what the numbers are. I've seen so many reports where companies blew the cover off the ball on earnings, came out with the cheerleading squad giving the most rosy guidance, and yet the market sold it off. Why? Many reasons. Maybe the stock was over-owned. When everybody's long and bullish on a stock, who's left to buy? And especially then the shorts are squeezed out. But I've seen it go the other way too. I'm not just telling you the stock can drop after earnings that goes up. I've seen stocks come out with an abysmal earnings report, horrible guidance, but the stock's washed out. Imagine a stock that's dropped 70-80% off its highs, a good company beat down at support with positive technicals, bullish divergences, oversold conditions, things like that, and the opposite effect happens. You get a short covering rally, you get and again, the seller's already washed out. Once all the last of the weak-handed longs wash out on a stock that's bottomed, you have nobody left but buyers. And so I'm looking at this potentially in reverse. I don't know if we're there yet. I'll have a good idea tomorrow in the next few days. And remember, guys, Apple was the first of 5 FANG stocks to report over the next week. We have 3 more to report this week, and then 1 more next week on the 3rd. I think it was Alphabet. It's the last one, if I'm recalling correctly, on I think it's Tuesday. Facebook, Amazon, Microsoft, all coming up here in the next few days. And so you guys see where I think it's going, levels to watch, levels where I'll start to step back and hey, maybe something else is going to happen. And as I showed you on QQQ, if you extend this uptrend line, and again, a very well-defined uptrend line, lots of reactions. We were working up this price channel for a while. Solid breakdown, all the check marks I like to see for a sell signal, impulsive follow through. And remember, nothing goes down forever. So even a simple ABC correction could take you down to that minimum target. First wave down, A, second wave up, B, C. That's a corrective wave within a larger, bullish pattern. So takeaway, I know some of you out there don't agree with my analysis. I'm going to be wrong sometimes. You're going to be wrong sometimes. We'll all be wrong sometimes. If you're bullish, then what I do is I give you levels that are likely to act as support and produce a reaction, and you can step in and buy. This is, like I said, my minimum target. So if I believe the market was going much higher, well above these highs, and who knows, there's a good chance I may be reversing, covering shorts and going long if we get there. That's where I'd be stepping in and buying. I want to see what happens next few days. Next week or so is going to be very volatile. We got the big hump here with the FANG earnings, and like I said, I've been saying for the last couple weeks here, I think that will most likely determine where the market goes over the next few months here. The market likes what they hear from these earnings. The rally should continue. We should come on up to new highs. If they don't like what they hear, well, there's some pretty severe overbought conditions, some divergences across the boards, things like that. In other words, the ingredients are in place. They just need the right catalyst and to trigger that downside. So let's wrap it up here, and we'll pick it up again tomorrow. subscribers. I'll get something out in the morning before the market opens, as always. In addition, of course, to the equity markets, I'll update other things that we might want to look at. I'll do updates on gold, silver, Bitcoin, crude oil, natural gas, cannabis stocks, other things that we've been trading recently, treasury bonds, all that good stuff. So let's wrap it up here and see what happens over the next 12 hours or so with Apple. This has been Randy Finney with the right side of the chart. Have a great day.